Let's review our trades for today. Today is Thursday, July 20th of 2023. So we did a couple trades in our main option trading account. We still have several in our small option trading account, but they didn't get filled today. So we'll look to get those filled tomorrow, let them be assigned over the weekend. So we'll focus on the three that we did here in our main option trading account. First, we just simply bought to close the SBUX, the SBUX July 21st, $97 cash carry put option. Just paid a couple pennies for it. As you see here, SBUX is scheduled to announce earnings in early August. So we want to try and avoid being in a position through earnings, and after earnings, we're going to look to go back into SBUX at the first opportunity. The next one is our CCI position. So we're in a covered call position in CCI. We had sold several covered call options. Only one of them expires tomorrow, and it's at the 130 strike price. And with CCI, with the big drop today, decided to go ahead and sell a new cash carry put option in anticipation of the 130 we sold being expiring worthless. So we sold to open the CCI August 18th 115 call. That'll be a covered call. Got 90 cents per share. So we have one that's way up here at 130 that expires tomorrow, and just plan to let that expire worthless. That's still open, but it should expire worthless tomorrow. Now overall, CCI is not looking that great. It was looking okay until today after earnings, when it gapped down and made a fresh new lower low. So CCI can't catch a break, but we got paid some cash in the meantime. So what I decided to do is sell this cover call strike price below where we were assigned the stock at originally, but it's right here in this area, right around all this potential resistance. Notice that served as resistance for it back in here in this area right here, early June. Also again, early July. That's also right around where our green 50 moving average is. So because of that, I felt comfortable selling it around that 115 area. It's still pretty far out of the money, about $8, $9 out of the money. So it's like $6, $7, $8 out of money. So has room for CCI to go up. And we are also short the 120 and also 125 covered calls for that expire in August. So we have some room for CCI to go up. I might roll these down if CCI continues to show continued weakness, but for now, we'll stick with the 115, 120, and 125 covered calls. We have one each for the 300 shares that we own. All right, and then finally a position that I want to go into a little bit of in-depth explanation about this position. So I like to do these ratio type of trades on stocks. They're pretty beaten down, and so they appear they have the potential to move big. And that's what we're hoping for, is a big move here for a big potential big win into the future. If it happens fast, great, but typically these things take time because these are turnaround plays. Their IIPR is a stock that's really been beaten down over the past few years. So as you see, it has a lot of room. It could potentially go up if it were to rebound. So let me kind of just first tell you the strike prices, and then I'll talk through the position on our charts here. So three legs here. First of all, to fund this deal, remember we always like to get paid every time we do a trade if at all possible. To fund this deal, we sold the IIPR December of 2024 $75 call option. That option's a little bit in the money. You see that the IIPR is trading right around $78.41. So that's a short call option that's a little bit in the money by a couple of dollars, but it's max time value for that expiration day. So you got $12 for that. And then we use that $12 to cap our potential loss. Remember, we sold the $75 call. So then we bought the same expiration day, 105 call. So notice a $30 spread here, and that times the one contract or 100 shares. This caps us at a max potential loss of $3,000 minus the 60 cents per share that we got, or $60 that we got. So that protective call option cost us $3.42. So what we do with the rest of our cash is we bought 5 of the farther out of the money, same expiration date, 120 call options for $1.67. So in all, we pocketed $60 minus commission. So let's go here to our chart. I'm actually going to go to this larger chart so we can have a little better visual of it. So notice, first of all, this is the weekly chart. Notice the IIPR, it is an overall downtrend on this weekly chart. It's made a lower low. So the question is, will it be able to turn a corner? Over the past couple months, it's been looking pretty good, but we don't know yet if it's really going to take off. So remember, we got a credit for this position. This is a bullish type of position. You could say it's neutral, but 60 cents over the next year and a half, that's not that exciting. Or $60, that's not that exciting. We're hoping for is a big move. But if it were to keep going down, we don't lose because we got paid $60 up front for this trade. However, if it can break through resistance here, and go up, then we begin to make money. And actually, I calculated it. Our break-even spot is when IIPR is at 126. Now that doesn't, there's a lot of variables in here, and that's why I don't define my exit yet. We have a long time to go. There's a lot of things that can happen. So I have a little chart here that I keep handy that helps me to kind of see where would my profit be at various positions. And this has inputted all my positions. I went and did all that for you. So notice that our break-even spot is 126. At 126, we're at a break-even. Below that, if it's above the, that's actually $75 here. Let's see. I need to change these two here. So it doesn't change our break-even, just we adjust them both by $5. So our break-even is still 126. Notice that if it's above 75, then but below this one, or around 105 and below the 126 area, we're gonna have a loss of $3,000. That's if we did nothing all the way through December of 2024. That's not the plan. If it's not going our way, there's lots of things we can do to adjust it, and we'll of course keep an eye on these positions. I usually check them about once a week. It's not urgent, we check them every day. But notice that it has the potential for a big win. So we have at most at risk $3,000 minus the $55 we got when we entered this position. So basically $3,000. But if IIPR were to go way up, it could really become a profit position. For example, if it gets to, let's see, if it gets to 150, we have a profit of $12,000. So can it get to 150? Well, that'd put it right in here. That's about a year and a half. So I definitely think that's possible. If it were to go really wild on us and go way up and go, say, to 200, where our profit would then be, for this position we're in, we 10x our risk, so it'd be $37,000. Now, is 200 possible? Well, now you're getting a little more in the not quite as likely. But is it possible that somewhere in here, over the next year and a half, we could exit this position for a nice profit? Well, I believe that we will. And it's a position that if the market were to decline, we're not hurt because we got a credit up front. If it were to go up, then we have a big win. And the thinking is, let's say that it just kind of drifted along and was around this 105 area, which potentially, if we held this through expiration, the 105 area would result in a $3,000 loss. But remember, if IIPR is around 105, then this 105 call option we own will have a decent bit of time value in it. And even the 120s, as long as we don't let it get too close to expiration, will have a decent bit of time value premium in it as well. So we have some positions. If it were to drift up, then these two should gain some time value, while the $75 call we sold loses time value. So we have a situation here where we can play with this and turn a position that if we let it sit through expiration might be a loss, we could turn it into a win. So I know it's a little bit of a complicated position. If you need to watch this video again, please do that. If you have any questions, of course, you can send them to me on Patreon or here in the YouTube video. So that's our trade for today. We have a handful of positions that expire tomorrow. Most of them like to expire worthless. Several of them we're going to adjust them, and we're of course looking every single day for new positions, new opportunities. And we have several positions in our small account. We have 4, and also some capital available in there that I'm looking for good positions, good potential positions where the underlyings are not announcing earnings in the next few weeks. And of course, I'll share those with you as soon as I make those trades. That's all for today. I hope you have a great evening.